Alright, so if you thought the UnitedHealth's drama was finally over, get ready because it's got even messier and we have a lot to talk about. Since my last video just a week ago, the stock of this company had been up and down on all of the news. So today I'll explain everything what had happened, what effect it might have on UnitedHealth as a business, and whether it is a smart buy this week at the end of May. Hey there and welcome to the Market Monkeys channel, it's Julie here, and if throughout this video you will find this research useful, don't forget to hit the like button, write a comment what do you think about UnitedHealth right now after all of the chaos of the previous week, and of course subscribe to this channel if you are new. Let's dive in. When we left off last time, UnitedHealth stock was actually starting to bounce back a little. After all of the drop, we got the news that the CEO of the company added $25 million worth of stock of this company, the CFO adding another $5 million, and a couple of board members adding some more. This PR move had worked like a charm, and the stock of this company was up the most in a single day. It's added about 8%. But then, out of nowhere, on May 21st, The Guardian dropped a new bomb. So The Guardian claimed that UnitedHealth was secretly paying bonuses to nursing homes to help them win new Medicare enrollees and reduce hospital transfers for sick patients. This report was not based on an anonymous tip, unlike the Wall Street Journal report that we saw last week about the Medicare fraud. This claim was actually backed by thousands of leaked corporate records, patient files, and even statements from over 20 former and current employees of UnitedHealth and the nursing home, with all of the details about how this scheme worked. Now, to be fair, the company denied the whole thing immediately, and they said that these partnerships were actually designed to improve patient outcomes and avoid unnecessary hospitalization, and they actually pointed out that the Department of Justice was looking into it a couple of years back, but decided not to pursue charges. But of course, the market reacts fast, and on this news, the stock of the company dropped 4.6% in a single day, wiping out most of the recent gains. And here I want to stop for a moment and say that I often see in different forums about UnitedHealth that investors of this company say that they see the news about the claims and the investigations, but when the company denies it, they actually believe that it means that it's not true and that the claims are not real. And if some of you think so, listen carefully because this will be an important information for you to hear. While these claims could be not real, the Wall Street Journal and the Guardian and any other legal claims could be not real until they're officially confirmed from the Department of Justice or the company itself. It's important to understand that the management of the company is interested in keeping the stock price up or even pumping it up if possible. So when the company says it did not get notified about any investigations or that it denies some claims, it's more than possible that the management of the company wants to deal with these problems quietly without sending the stock price down, so please beware. And if that wasn't bad enough, that same morning HSBC announced a recent stock downgrade. They dropped UnitedHealth from hold to reduce, which is basically a polite way of saying, yeah, maybe sell this thing. And they actually have cut their price target for the stock of this company dramatically from $490 to $270 per share. And this is insane. And of course, it made investors nervous because it basically means that according to HSBC, the stock of the company right now is overvalued. By the way, it's not only HSBC. Before that, we already saw that the Bank of America had downgraded the stock of this company as well. And right now I see that the narrative of analysts is in general shifting regarding this company, so I wouldn't be surprised to see more negative downgrades in the near future. While UnitedHealth management was dealing with the Guardian news and the investors of this company were upset over the HSBC rating downgrade, we actually got another pretty bad news. Centers for Medicare and Medicaid Services, or CMS, announced a major policy change. They're launching a massive expansion of audits on Medicare Advantage plans. Let me explain it to you as simple as I can. So basically, CMS has workers with the title of medical coders, And what these people do, they actually check patients' medical records, and they check if insurer companies are not overbilling the government for the Medicare Advantage. What it means that basically the companies are not billing the government for some services that were not actually made to the people, and that, for example, the company is not billing the government for some services that weren't medically necessary for those patients. So currently, Centers for Medicare and Medicaid Services have only 40 workers like this nationwide. It means that only 40 people are responsible to check over a huge amount of data and to see if this overbilling happens. As you can realize, to check all of the records in the country of the size of the United States for 40 people is just simply impossible. So basically we can say that these audits were almost not done at all. And right now, CMS said that they will grow from 40 people to 2,000 people by the end of 2025. This is a 50 times increase. It's a massive increase. Besides that, they said that they're adopting some technology, and if I understood correctly, they have some AI software that will help them with these audits as well. Now, this number of new workers together with the new software will actually allow them to go as far back as 2018 and to check all of the medical records of all of the Medicare Advantage plans from 2018 to 2024. The last time they audited overbilling so seriously was in 2007. And this is actually a very bad news for UnitedHealth, because according to the estimations, Medicare Advantage insurers have been overbilling the government anywhere from $17 billion to $43 billion per year. Now, even if it spreads across all of the industry and across multiple insurers, you understand that UnitedHealth is the biggest one. So if CMS will find overbilling, and let's be honest, probably they will, because first of all, the amount of data is huge and it's very simple to make a mistake and to bill overly. And besides that, if companies in this industry know that the audits are not being made properly, it's safe to assume that someone would want to take advantage of it. I'm not saying that they are, but I say it's more than possible. And by the way, this is one of the macro risks I discussed so much in my previous video, and I actually said that I view macro risks as the main negative catalyst for this company and not the investigations. Of course, the investigations can send the stock flying down on the day of the news, but these changes in policies that we're seeing lately, they are actually changing the business of the company long run. So where are we now? After all of the news, UnitedHealth stock is down more than 30% in the past 30 days and more than 40% in the past year. The company lost about $68 billion in market value since the CEO of the company, Andrew Whitty, had stepped down. And right now, I would say we have few major things to watch out for. At least this is the things that I am watching closely to see from this company. First of all, I really want to hear some guidance from this company. The fact that they do not have any guidance at all for this year is actually a very bad sign. It means the company is not at all sure what they will do, how much money they will have, and where in general the trend is headed. Second thing is, of course, we need to watch closely right now these CMS audits, because as I already said, if they will find some holes in data, in numbers, UnitedHealth will be the company to pay the most and will be the company to be hit the most as a result. And here is the million-dollar question right now. Is the UnitedHealth stock a buy? And honestly, I have to say that right now it comes down to your risk tolerance and your time horizon, because right now the company is very cheap. Even after all this drama, the company's forward price to earnings ratio is around 12.5, which is ridiculously low for this company. The dividend yield is about 3%, and the return on equity and return on capital are still sitting comfortably at about 24% and 12% respectively. But to be ready to jump in right now, you have to believe that this is just a temporary storm. As I already said, the news about the CMS and the news about the Optum, I talked about this in the previous video. Basically, all of these reforms, if they work together, if the Medical Advantage margins take a permanent hit, and if the company stops earning money from Optum, it could actually change the business of the company, and then if it happens, 12.5 times earnings will change and will grow very, very fast. And by the way, pay attention, because if you bought the stock of this company recently with the hope that you will quickly double your money or almost double your money, it may not happen. Because again, if CMS finds some overbilling for Medicare Advantage, the company and the business will be hit, and they might not come back to the levels you expect them to in a very long time from now. Just keep it in mind. Let me know in the comments if you think I'm overreacting about these macro risks. And I was happy to see you on our channel. Thank you for watching. Hit that like button, subscribe to our channel. I'll see you next time. Happy investing!